watching Wall Street Confidential this Friday. I'm Farnoosh Torabi. Welcome, Jim Cramer. Jim, the Fed has cut rates by 50 basis points. A lot of people now trying to find where the next bubble is going to be, and oil is topping those headlines.
Well, that's just wrong. A bubble is defined by a stretch in valuation of remarkable proportions. In other words, Cisco's selling at 40 times earnings, Intel's selling at 40 times earnings. Talking about Scient and Viant exploding in valuation off of no real earnings. So, I mean, one of the things that I think we really got to understand is that, and I'm going to get to the housing issue because the housing issue says my theory is wrong, but you're not going to have a bubble with stocks that are selling at 8, 9, 10 earnings. And the reason why you're not going to have a bubble is because those are companies that can buy back a lot of stock and they can increase the dividend. Now, you could say, well, Jim, Toll Brothers, Lennar, and KB Homes were selling at 8 times earnings, so doesn't that mean your thesis is wrong? No, because those could not buy back stock. They're running out of money. And those could not increase dividend. They can't because they would violate covenants. So you got to distinguish between various companies. Again, putting my hedge fund hat on. Companies that sell at 8, 9, 10 times earnings may be selling at that low versus the S&P 500 because either earnings are going to fall off dramatically or because they're misvalued by the market. And I'm saying that oil is misvalued, has been the whole way. That's how Conoco could go from 78 to 88, how Chevron go up. And a lot of that is because the oil forecasts, and this, again, you have to understand the metric of stocks. Oil stocks trade off of where the big brokerage firms think that oil's going. And all of the big brokerage firms are still, with the exception of Goldman Sachs, still way too low in their estimate of crude. As long as their estimate of crude is 60, 70, then the numbers are going to be blown away. And the valuations are going to be very cheap. So that's why oil still works.
And your estimation for oil, for crude?
I think it trades 75, 85.
Okay.
And at 75, 85, remember how these companies make money. They make money 3 ways. They make money through derivatives of oil, chemicals, Conoco, that kind of thing. They make money at the gas station. And they make money by being able to take oil that they have in the ground for very low cost and sell it for very high cost. And as long as you have reserves, you can take advantage of it. I've been emphasizing XTO Corp and Bob Simpson because he's actually adding reserves. The way that we used to look at oil before oil spiked and oil was just between 10 and 40 and 10 and 40 was who's finding the most oil. We forgot or no longer do that because finding oil is now really a play on Schlumberger and Transocean. So one of the things, I got to emphasize this. You must find the metric that the market is using for every single stock. When I go into stockpicker.com, which is a lot of people who are trying to learn, they don't understand that the first thing you do is find the metric. Once you know the metric, then you can make decisions on which of the oils to buy or which of any group to buy. The metrics are different per industry. And without knowing what the metric is, you're just going to get it wrong.
You like those folks that are looking for drilling, that are drilling for new sites.
Yeah, but the only ones really doing it is XTO. One of the reasons why Exxon is a great company is because it's a bank. It takes all of its money. It's got $2, $3 oil in the ground. It sells it for 50, 60, 70. And then it takes the proceeds and it pours it back not into drilling, but into shareholders, which is why right now that's been a great stock. It can continue to be a great stock because it just so happens that they had the largest reserves of any company. They're like a nation. But it is not the way I like to invest at this point in the cycle. I'm always going to recommend Exxon because Exxon is, I would describe Exxon as Procter. But sometimes you want to pick a stock that is going to be next Procter, and that's XTO, which is natural gas.
XTO, the next Procter. Thanks a lot, Jim Cramer on Wall Street Confidential. Happy Friday.